Okay, everybody, so welcome back. This is the exam for the mortgage market and loan types. If you've been following along in the other videos, then you will have some questions here, see how you do. I'm not promising I'm going to pass. What institution was formed in 1968 and took over the sale of government loan market? I have no idea. I'm thinking it's Fannie Mae, maybe. I don't remember seeing any of that. Okay. This Theo is a buyer who's contemplating a land contract. Why might he take this route over traditional financing? He doesn't qualify. With this type of loan, personal property is included in real property in the sale. It's commonly seen in commercial real estate, but you may also see this in the sale of furnished condominiums. I'm thinking it might be a package mortgage. With which type of mortgage does the interest rate vary according to a specified index? I'm thinking adjustable. Which of these type of gap financings are temporarily until the consumer can obtain permanent financing? Maybe a wraparound. In which market do lenders originate real estate loans operate? I would say primary mortgage. Okay, how do primary and secondary markets work together? I believe the secondary market packages loan to sell to the primary. Your buyer clients have plenty for a down payment and closing in like a lower interest rate than the going rate. How can they use some of their saved funds to get a better interest rate? They can buy down the interest rate. They can postpone paying interest for a certain amount of time. I don't know. I don't think you can use your funds. That's a kind of a trick question, isn't it? With a land contract, who retains the title? The seller. An adjustable rate mortgage has an interest rate of 5%. When the first interest arrives, the rate can be adjusted a maximum of 1. All other ones are adjusted to 2, and the highest is up at 9. So I want to say it's a periodic cap, maybe. I don't remember. That's a guess. Any financial institution with deposits that are insured by the federal government agency can sell mortgages to. I don't know. I'm guessing on this one too. I'm guessing on a lot of these. Maybe we should go back and try Googling some of these things. Some of these questions so that we don't fail them. We don't have to take this test again. All right. Let's see if we know. Fannie Mae. It's saying Fannie Mae. Okay. Let me go back here. Oh, that one, I don't know. All right. Which of the following is true of secondary mortgage markets? Lenders don't purchase. Well, the borrowers right around affected. I would say this is true. The loan originates. Borrowers have a say in the entity. All right, I don't know. I'm not feeling positive. Yeah, I figured I failed that one. That one. Okay, this one is Jeannie Mae. Okay, that's 1968 is Jeannie Mae. All right. That one we got right. This one we got right. And we got a lot of them right. But it was 12 questions. Okay, temporarily until they can get a financing is a bridge loan. Okay. All right, a bridge loan. Okay. Real estate operate the primary market, sells to the secondary market. Okay, I had that backwards on that one. They can buy down the interest rate. Well, I didn't know that either. Okay, a land contract, the seller retains property. I got this one right. It's a good guess. I have no clue. Okay, this one was Freddie Mac, so we Googled that and we got it wrong. Didn't I say I was going to pick Freddie Mac too? I should have went with my first instinct on that. All right, so we got to go back and take this again. Hopefully I had to take one of these tests like 5 times, no kidding. I was so exhausted. And the only reason I passed the 5th one is because they were repeating a lot of the questions. But hopefully we won't have to take it 5 times. Okay, let's see. She purchased her home from a friendly neighborhood bank. Which of these likely happened soon after she received it from the bank? What happened to Joan's loan after she received it from the bank? She sold the loan or bank sold it on the loan? Or bank probably sold it to make an investment. All right, a blanket loan is often used in commercial applications when 2 or more properties are pledged for security. A blanket mortgage is used with commercial applications when 2 or more properties are pledged as security. I don't know. This one, I think it's blanket, but it could be bridge. Which market do lenders purchase packaged goods? I'm thinking the primary. All right, Victor bought a property from 200 under the terms of the land contract. Victor agreed to pay Yolanda monthly installments, who retains the title. I think Victor does. All right, what could be a consequence if there was no secondary mortgage market? Lenders might not have enough funds. You're a farmer. Which loan program would tailor to you? Farmer Mac. An adjustable rate mortgage of 5%, lifetime cap of 6. What's the maximum rate can be charged any time during the life of the loan? I want to guess 6, right? I don't know. I'm thinking. What is the 1% rate in here? The rate can be adjusted. I'm going to say periodic cap. I want to say, because they keep talking about time on here, that maybe it's an initial cap. But I don't know. Okay, let's try periodic. Charles is selling his property to Seth. Charles is financing part of it for Seth, who will make payments to Charles while Charles retains the property title. I want to say it's a wraparound. No, it's a land contract. Okay, what institution was established in 1938 to purchase FHA insured loans from individuals? Which entity purpose is to keep U.S. finances in check by maintaining a balance and favorable economic conditions? I want to say the Federal Reserves. The Hendersons don't have enough money to make the 20% down. The seller's willing to finance. What is this type of financing called? I'm guessing here that is it. All right, so we failed it again. All right. Let's see what we got wrong. Okay, which market do lenders purchase packages? It's in the secondary market. Yolanda is the one that holds the title. Who retains the title? Yolanda holds it. So this is 11%. Okay. Well, that was weird. I guess they took the 5 and the 6 and added it together. Okay. Initial cap. That was my second guess. Initial cap here. Okay. Land contract. This one is Fannie Mae, 1938. I think 68 is Jeannie, 1938 is this one. Federal Reserve. This one's purchase money order. That was a guess too, and we got that one right. All right, gotta do it again. Hopefully we won't have to do it 5 times. You're getting a lot of questions in if you're following along. If you like taking questions and it helps you study, then this is all for you. All right, see how we do. All right, what does the 9% represent? Didn't we have this question before? I think it's periodic. Maybe it's a maximum. The highest rate it can be charged is 9, which would be a maximum cap, I would think. What kind of mortgage involves 2 or more properties pledged for repayment of a loan? Maybe a wraparound? It's either that or blanket. Amy purchased a new home obtained through financing through a bank. Natalia originated the loan, but therefore the first mortgage was sold to City Mortgage as a loan originator. What market is Natalia Bank operating in? I think the secondary market. Right, the secondary market buys loans from the primary market. Okay, let's go back. So if it's not, okay, she's working for a bank with her own name. Natalia Bank. Okay, financing through a bank called her own name. All right. Payment was due. It sold her loan to City. So City is the second because the primary sells to the secondary. No, secondary buys loans from the primary. The secondary loan, it sold her loan to mortgage. It sold her loan. So it sold her loan. The secondary mortgage buys. So who's buying the loan? Who is buying the loan here? It sold her loan to. So City Mortgage is the secondary because it is buying the loan from Natalia Bank. Okay. So Natalia is the first primary. Let's see if we get that right, but we spent a lot of time on that. How does this aid the lending market? How does the Fed maintain a balanced economy? Which of the following loan types involves graduated payment? Oh my God, I have no idea. I want to say amortization. Okay, Tom the seller is helping with financing. Tom will give this mortgage to the buyer and the money will go towards the down payment. What kind of mortgage is this? I'm going to say it's a wraparound or it's a purchase money mortgage. Your buyer is looking at mortgage loans for a condo he wants to buy. I tell you, I think the interest rate's going down. I want mortgage payments dropped. Ooh, I'm wrong. I don't mind paying a higher interest as long as it doesn't go too high. Which is his best bet? Adjustable rate loan. When it's called, a number of percentage points is added to the index to determine the rate for an adjustable rate mortgage. I want to say margin, so maybe either or. Nina and Rob prepaid some of their interest to the lender when they're financing their home. What's this called? Maybe a buy down. I can't remember what a buy down was. What type of loan is given on the amount of equity a borrower has in the home? Home equity loan? What is the process of paying off a loan by making periodic payments? Amortization? I don't know. Nope. This is the third time we've taken it and we've got this same amount wrong. All right, so this one is lifetime cap, not maximum cap. Okay, this one is wrap around when you got 2 or more pledged for security. No, it's blanket. Okay, remember I said it might be blanket, so I said it was either or. Okay, primary mortgage, we got that right. I spent a lot of time on that one. Okay, by regulating bonds. This one is pledged account. Which of the following loan types involves graduated payments as pledged account? So this one is purchase money. When I said it was either one, I was like going back and forth with this one. So it's purchase money. I thought that's what it was. Okay, let's see. This is adjustable rate loan. This one is margin. Okay, that was another one I wasn't sure on. Number of percentage points added to the index to determine the rate for the adjustable is margin. And we got this one right, a buy down, when they prepay their interest. This one was easy, and this one was somewhat easy. Okay, so hopefully we'll get some repeats on the next one and pass it. We've got the same amount correct every single time. Look at that. Taken it 3 times and we've gotten 7 correct. So let's aim for like 9 or 10 so we can pass it. Okay. Keep your fingers crossed. All right. Which type of loan has a lump sum payment due at the end of the loan? I believe it is a balloon mortgage. Which of the following describes a buy down? I believe it's this one. Which of the following is a true statement about loan types? I have no idea. Maybe this. Okay. All right. Which loans involve risk for the lender and therefore usually come with a higher rate? Maybe reverse. Either that or construction. All right, the secondary mortgage market buys loans from the primary market. How does this aid the lending market? Insurance funds are available. Your buyer client, George, is looking for mortgage loans and he doesn't want to go too high. Which is his best bet? let's see. I know we had this question before and I can't remember. I think it was a wraparound mortgage, but how does the Fed maintain a balanced economy? This one was a repeat, so I know I got that one correct. I apologize if you all hear this noise outside. I'm not sure if you hear it or not. Which type of mortgage has an interest rate that remains constant over the life of the loan? I would say a fixed rate. What kind of mortgage involves two properties pledged as security? Didn't we just have this one too? Was it blanket? I think it was blanket. Which of the following loan type involves a graduated payment? You see some of these questions are starting to repeat themselves. What type of arrangement allows the buyer to retain title to the property but places a security interest on the seller? All right, how do the primary and secondary mortgage markets work together? The primary sells to the secondary. Okay. All right, well, we got one less wrong. All right, let's see what we did here. Let's see what we got wrong. This one. A graduated payment is where the one loan payment ratchets up predetermined. And this one is a higher risk as construction. Okay, that's why I was going back and forth with that one. Wraparound, adjustable rate loan is this one here. Doesn't want to go too high. All right, how does the Feds maintain a balanced economy? Oh, got that one right. Got that one right. This one is pledged account. Graduated payment is pledged account. All right. Security interest in the property on behalf, purchase money order, and the primary sells to the secondary. All right, so this is going to be our last time because we're going to run out of time. I don't do my videos over 30 minutes normally for anything, but occasionally it might happen if I'm running my mouth too long. All right, Charles is selling to Seth. Charles is financing him. What is this an example of? Land contract. What is it called when a number of percentage points are added to the index to determine the rate? All right, I think it's initial. It's either initial or margin. I can't remember. I don't know. What do you think? I wish you guys could talk through the computer. Is it initial cap or margin? Margin, initial cap. I think it's margin. Let's try margin. All right. There is a buyer who's contemplating a land contract. Why might he choose this route over traditional? Because he doesn't qualify. In the secondary market, he buys loans from the primary. How does this help the lender? Ensures that funds are available. One institution is in 1938. 1938 is Fannie Mae. 1968 was Jeannie Mae, I believe. You're a farmer. What program is for you? Farmer Mac. An institutional with deposits that are insured by the federal government agency to sell mortgages to any financial institution that with deposits that are insured can sell mortgages to this institution. Oh boy. Might be Jeannie Mae. I want to say Freddie Mac. Which type of mortgage does the interest rate vary according to the specified index? How do the primary and secondary markets work together? Which type of loan, personal, is included with the real property of its sale? It's commonly seen in commercial, but you may see it in the sale of furnished condominiums. Okay, what type of loan is given on the amount of equity a borrower has in the home? Your buyer has plenty for a down payment. They'd like to lower the interest rate. They can buy down the interest rate. All right, got 100%. That's because most of them are repeats. Okay, so again, this took 5 times, and we're out of time. So if you want to come back on the next video, if you're following an order, it's going to be legislation affecting financing. Okay, so that's going to be the next video in this series. I'm running out of voice. So I appreciate y'all. Come back on the next video. Thank you.